Hey guys, Steven Giordano, Family First Life, Health and Wealth. I'm honored and privileged today to be joining you guys on the Next Level Live, where I'm going to be diving into my phone script for final expense and mortgage protection, as well as my in-home. So the number one thing, guys, when it comes to the phone and your dial day, is we want to look at leads. So I like to look at leads and talk to new agents about the vendor relationship, because when we're going into a dial day, we need to know that we have to have enough leads for that specific day, that we are calling and enough people to hit our appointment goal for the next 2 days that we're going to be running. So the vendor relationship, calling those vendors and figuring out, number one, how far in advance we need to order leads so that on our dial days we have enough. And then number two, how big of a radius we need to be opened up to on a Facebook final expense so we have enough on that day. So I really like to have that relationship with vendors, because then it leads us to having enough leads in front of us when we're sitting down to dial. The next thing is your overall mindset when it comes to the phones. Nobody gets fired up about the phones. Nobody. And if they tell you they do, they're lying. But the fact of the matter is, the phones is what will set you free and what will make you money, because that's how we get in front of people and that's how we protect families and serve. So you need to go into your dial day with the right mentality, saying, I'm going to pound these phones and call these leads until I hit the appointment goal that I'm looking to hit and achieve for the next 2 run days. So it's all mental when you're starting things out. The best time to dial. I hear a lot about the best time to dial, the times that you should dial, the times that you shouldn't dial. The best time to dial is all the time. I like to live in that 8 a.m. to 9 p.m. window. So when we're starting out our dial day, we're sitting down ready to go with our finger to the buttons of the phone with our first call at 8 a.m. Not taking our time, wasting time, and just thinking that we're going to get to it, You need to attack dial day, and you need to attack the phones at 8 a.m. And then also understand that throughout that whole window of 8 a.m. to 9 p.m. is the perfect time to dial. You hear a lot of times where agents say, oh, what's the best time? What's the most perfect time? There isn't a magical perfect time. It's just dialing consistently throughout the day until, again, you hit the appointment goal. So to me, it's not a script, it's a conversation. I don't like the word script. I don't like what it kind of means when it comes to dialing the phone. We're having a conversation. This person filled out a lead. They put down their information. They're looking for help. They're looking for insurance, whether it be on final expense or mortgage protection. They're waiting for someone to get back to them. So it's not a matter of me being very scripted when I'm on the phone. It's a matter of me having a conversation with the client where I'm confirming the information that they sent to us and then letting them know what the process is moving forward. Your tonality and your cadence on the phone. I think when you're on the phone, you need to be very, very level and monotone. You don't want to be too excitable. You don't want to come off as a telemarketer. You want to come off with the right cadence where you're just someone who got that information, again, is getting back to them. And now we're going to figure out a time where we can get together and get you the insurance that you requested. So the tonality should just always be soft, unexcitable, and kind of to the next thing, almost like you're uninterested in the actual conversation and not overly excited when they say, yeah, come on over, come over and get me a plan, get me a policy. A quick transition. This is something that is something you need to work at as a skill, but I think it's something that's very, very important. And I honestly think it's bigger than the actual quote-unquote script. Transition on the phone from objection to getting back to getting into the appointment is really where it's at. Because if you think about it, someone on the phone throws you off your game and throws you something that you weren't ready to hear, and now you freeze. And then what happens next? There's some dead time in the air, and then they hang up. So you need to make sure that there's a quick transition, that in your brain, no matter what they say, you're going to have something to go back to. And I'll give you an example. So I call up my lead, and they say, oh, I'm not interested. Perfect. I'm really not that interested either, but you filled out this information saying that you were looking to protect your kids, and I'm getting back to you to do that. So anyway, I'm going to be out that way on Tuesday between 7:15 and 7:30. Things like that along those lines, where you have to make that transition to get back to the point, to keep them on the phone and get to the appointment and to it being booked. Psychology. The psychology around the phone always has to be where we're getting to the appointment, and that they also understand that when we get to the appointment, I'm coming out to get you a policy and I'm coming out to get you insurance. I don't want to be the guy that drops things off. I don't want to be the guy that gives quotes. I want to be the guy who writes you policies. So I like to say different verbiage that talks about me coming out and getting you a policy and seeing what you qualify for. Less is more. A lot of times I hear new agents and they think they have to say a lot of words on the phone and say a lot of things. A lot of words is going to get you hung up on. Less is more. Confirming the information, telling them the process, getting to the appointment, and then moving on. And then confirming it, which we're going to get to. Again, it's all about the appointment. Everything that we do is about the appointment. If someone tells you that they're looking for a quote, they're looking for a price, it's impossible for you to do that. It's about the appointment. All of the things that are going to come of the conversation are going to come when you go out and meet the family and review the options with them, see what they qualify for, and find something in their budget. Having an appointment goal. When you sit down on your dial day, your goal should be centered around how many appointments, again, you need for those next 2 days. And you should not stop dialing until you hit that goal. So let's go through a little bit of the final expense first on the phone side of things. Understanding the ad. All of your different social media leads, Facebook leads, have different ads. Again, going back to that vendor relationship, understanding what the client's seeing. So then you can better communicate back to them what they're seeing. So if I'm doing a little bit of a role play here, and I'm calling Mary, Mary? Hey Mary, this is Steve. I was getting back to you in response to the state-regulated final expense burial programs that you had applied for on Facebook. I'm the local underwriter assigned to help you out. I just want to quickly confirm your information. I have your date of birth here, 10/12/45. Is that correct? Correct. And you also put down here that your favorite color is blue. So again, I'm understanding the ad and understanding in that scenario with that lead, they put down their favorite color. Some other vendors we use might talk about the beneficiary, might talk about how much coverage they have or how much coverage they're looking for. Always obviously going back to those things so you can confirm the reason that they filled something out, and it refreshes things in their brain very, very quickly. Slowing down your tone on final expense. We're dealing with clients that are older. We need to make sure that they understand us, that we are clear, concise, we have the right tonality again, and we're loud enough that they can hear us, and that they're not giving you that kind of, what did you say, or why are you calling, or thinking you're a telemarketer. So that tonality and that exchange is key and paramount, particularly in the beginning on your final expense phone training. The security question. Sometimes it's that color, sometimes it's a favorite hobby, sometimes it's a favorite vacation spot. So always confirming that with your final expense clients. The beneficiary. I like to then, in that scenario of a phone script, I like to then ask Mary, who are we protecting? Who's your beneficiary? Because now it makes it very, very real for Mary on who the person is that she filled out to protect for, who's the beneficiary. Acknowledging the objections, but moving past the objections. So when you get objections on the phone, number one, it's best to try to be out in front of them. And if you're kind of doing those steps that I was talking about, most times you're going to be. But when you have not acknowledged, the best thing that I've heard in many trainings is, perfect, that's the reason for my call. I already took care of that. I already got a policy. Perfect, that's the reason for my call. Most clients have policies, they either don't have enough or they have an expiring policy, or they have a 2-year wait period. Mary, which category would you fall in? And again, it throws it back to them. The other key thing on the phone to me is whenever you're talking to a client, the questions you're asking them are ones that are painting them into a corner, where they have to answer it in a way that you want, that's going to be beneficial for, again, you getting in the house and coming out and getting them a policy. Confirming the date and time 3 times. So when I then say to Mary, so Mary, I'm out in your area on Tuesday and Wednesday, and I'm really busy. I'm meeting with a lot of different families, because as you can imagine, with the times that we're in, everybody's looking for insurance. Do you have any doctor appointments on Tuesday? Oh, you don't? Great. Well, I'm going to squeeze you in between 11:15 and 11:45, and again, it's going to take us just about 15 minutes to get you the coverage that you were looking for. So now I said it once. So then she registers back, acknowledging. Then I say it again. All right, Mary, so I'm jotting this down on my calendar for Tuesday, 11:15. Now I've said it twice. Now I'm going to ask something funny, like, is there a gate to go through? A lot of times, you know, in Florida and a lot of different states, there's gates you have to go through. Maybe they have to put you on a list. You know, is it an apartment or a house type of a deal? You know, is there a gate that we need to deal with? And if she tells me yes, no, whatever it is, I'm going to jot that down, put it in my notes, and then I'm going to say again, all right, so Mary, I'm going to see you on Tuesday at 11:15, and then I'm going to give the confirmation code. Confirmation code, Mary, is JW47, and again, my name is Steve. And if you could write that down on a piece of paper, it would be greatly appreciated. And again, I'm going to see you Tuesday, 11:15. So I'm saying it 3 times. I'm giving a confirmation code. I'm trying to lend myself to not having no-shows, or at least less no-shows than I normally would, all by doing these kind of simple steps. The mortgage protection phone training. So kind of the same dynamics, a little bit different information that we're going to kind of touch upon here and go through. Again, confirming the information. So I'm calling Jane. Ring, ring, ring. Hello? Jane? Yes. Hey, Jane, this is Steve. I was getting back to you in response to the mortgage protection form that you'd sent in. I'm the local underwriter assigned to help you. I just quickly wanted to confirm your information. I have your date of birth here, 11/4/72. Is that correct? So I'm trying to keep my cadence again clear, giving that date of birth, and then she's confirming back to me. Okay, great. And then I have your spouse here down. His date of birth is 12/3/73. Is that correct? Correct. And then we have you over at 123 Main Street in Hollywood, Florida, and your loan's $200,000. Is that correct? Correct. Now, sometimes you're going to get in that point, you know, who you're from, where you're with, are you with my bank, things of that nature. Always just kind of rewind a little bit, go back, and let them know. My job is simple. I just need to find 15 minutes to get with you and review the different options for mortgage protection for the form that you guys had filled out. Do you remember doing that? And then it kind of triggers in their brain, oh, the mortgage protection. One of the things I like to ask there, if I don't know about the spouse, is meeting with all the decision makers, everybody that's involved. So if I don't know, I want to ask, is there anybody else involved in the decision on this loan that we need to meet with? Because sometimes you might not know. Sometimes there might not be a spouse. Sometimes there might not be, you know, a parent or whomever it might be. And the last thing you want to do is get one-legged. So asking about meeting with all the decision makers. So now, Jane, are you working or retired? Or are you off due to everything going on right now? It's kind of something I've tweaked now, you know, during the current pandemic to kind of figure out kind of who's home and who's not. Okay, perfect. So you're working? All right, great. I'm really busy. I'm going to be out your way on Tuesday evening. I'm meeting with a bunch of your neighbors. As you can imagine, with everything going on, everybody's getting policies right now. I'm going to squeeze you in between 6:30 and 6:45. Any reason you think you guys wouldn't be home for about 15 minutes? So, again, everybody's doing it. Love to say that, especially with everything going on right now. And then squeezing you in, you know, I'm going to be out that way at that time, giving you the 15-minute window, and then getting that, you know, that confirmation. Sometimes I'll like to ask about the beneficiaries. if I don't know? Who are we looking to protect here? Is it your children? Is it just your spouse? Is there anybody else that we're looking to protect in this dynamic? Some of the mortgage objections that you're going to get, and we kind of touched upon one. Sometimes you're going to get, I just want a price. Well, Jane, it's kind of impossible for me to just give you a price. I work with 15 different A-rated carriers. This is kind of like buying a car. There's a million different cars and a million different options. I'm going to come out and figure out which one you'd qualify to get in, and then which one's going to make the most sense and be affordable in your budget. Obviously, I can't do that just over the phone with just a blanket price. And then it kind of stops them in their tracks. And again, you're taking control and letting them now know what you need and what the process is going to look like. Can you just send me the information? Jane, I wish I could. My life would be really easy. I wouldn't have to drive around all day and meet with families. But unfortunately, I need to meet with you, verify that you are alive and well, and then go through your health and figure out which plan you're best going to qualify for. Again, taking it right back to the appointment where you're the doctor, they're the patient, and you're telling them the process, and you're not allowing them to tell you how they want the process to be. Very, very key. And again, same as final expense, confirming the date and time 3 times, saying that over and over. And again, same deal, asking, obviously most times it's going to be in a house. Sometimes you're going to get the apartment, with a mortgage or whatever the case might be. So confirming it. So very simple dynamics on both final expense and mortgage protection for phone, but just kind of some key things that'll help everybody out. And again, the confirmation code. Always good to have a confirmation code, get them writing things down, and then we move on. So now, the in-home. For mortgage protection, we're going to start there first. Always remembering, going back to mindset, you're in control. If you went to the doctor and you were sitting in his room and you were waiting for him, he'd be the one dictating to you what was going to go on. He's in control. He's the doctor. You have to look at this the same way. Now, another analogy I like to talk about, and I've talked about in other trainings, is being a road team in the NFL. For my football fans, you know that if you're the road team, you're going into a crazy environment, it's loud, they're trying to throw you off your game, but you're trying to stay laser focused on the objective at hand, which is winning the game and keeping everything right in front of you. It's the same in a home. We've all been in many homes. There can be kids running around, there can be dogs going crazy, you might have to deal with a TV, turning the TV off or lowering a TV. The bottom line is, with all the distraction going on, you need to remain focused because there's one objective here: getting these clients approved on a policy, and one day then coming back and delivering a death check that is going to change the life of the entire family and for generations to come. So you always have to keep that in the back of your mind. So being in control. So I'm up to the door. With authority, I'm knocking on the door, letting them know I'm here, I mean business. Smiling, waving, walking in, asking if I should take my shoes off, showing them some respect. And then I'm looking for a table. I'm scouring around looking for a table, and I'm walking towards wherever that table is because that's where I want to do business. We're doing business here. Rapport from the door. I'm not one that wants to sit and have rapport and talk to you for 3 hours because, number one, you're probably going to then get in the friend zone and they're going to like you and then they're not going to get anything from you. Plus, if we're booking 30 appointments and we're booking, 8 in a day and we're every hour on the hour, we don't have time for it and it's not really necessary. So what my rapport is as I'm walking in, I'm observing and I'm asking questions. And I like to just look around and kind of figure out real quick exactly kind of where I am, what's going on, and what are the things that I can ask about. So how long they've lived here. Is it new or a refinance? Where are they from originally? How did they meet? How many kids do they have? I'll just start, throwing out questions. And now I'm answering a lot of the things that I'm going to get into in my financial inventory anyway as I'm building rapport with them. So it's kind of, I'm killing 2 birds with 1 stone. So rapport from the door, very important. Then we're sitting down. I'm pulling out my iPad and I'm pulling out an Americo folder that you can get through Americo. You can order folders and brochures. And in my folder I have my client worksheet as well as a blank piece of paper for quotes. Then I have the carrier page that has all the different carriers, and usually I'll have, let's say on a mortgage protection, I'll have an HMS brochure. I'm throwing out my business card. I'm letting them know who I am. I'm Steve. I handle mortgage protection in the county as well as retirement planning and all other types of regular life insurance. Today what we're going to be doing is finding a plan for you that makes financial sense and is going to protect your family. So one of the big things I'm going to talk about here, and I kind of did a little bit on my phone, is just the psychology. You have to talk things into existence. You have to understand when you go into a house, we're getting you a policy. I didn't drive here and you didn't fill out a form and ask for help for me to not get you a policy. So I'm getting you a policy. It's just a matter of how big of a policy and where we're gonna fit it in the budget. But we're getting you a policy. So have that in your mindset going in. Don't have it in the mindset that, oh, well, maybe we're going to get you a policy today. No, that's not how we protect and serve families. So letting them know, obviously, again, who I am and what I do. And then I'll ask the question, and I'll say the question in the form of me guiding them to where I want them to go. I'm assuming, Jane, that you and Bob filled this out because you want to make sure if something happens to either one of you that the family is protected, right? That's what all the clients I meet with typically tell me. And then you let them speak. And again, I said things that are going to lead them towards, the answer that I'm looking for and the answer that I'm probably going to get. Because that right there is how we're picking up chips throughout the appointment. And we're going to take all those chips and then we're going to use them at the end. So getting that information of why they filled it out, who the beneficiaries are, whether it's each other, kids, whatever. Verbiage to get them to move. In that psychology that I talked about, you're going to be using verbiage throughout the entire appointment that leads them to an application. When we fill out the application, when I submit everything, when we get you a policy. It's not if, it's not maybe, it's when, because it's happening. It's going to happen in the future, in the very near future. So verbiage to get them to move. We're going to touch upon that as we move along here. I tell them this, and this is what I like to say, the kind of keep it simple dynamic. We have two objectives, the two A's, approval and affordable. That's what we're looking to get out of today's meeting. I'm looking to find where I can get you approved contingent on your health and medication history and what's affordable in your budget. So I love talking about affordability, and we're going to talk about budget a little later on. Affordability talks completely about the fact that I'm not a sales guy trying to get you the most expensive thing in the world. Instead, I'm your friend, and I'm trying to find what's going to be affordable in your budget that's going to make financial sense. And I'll say words like that. And then it puts people at ease, because now you're not the sales guy, you're the helper guy who's looking to get them a policy. Let them know the process, very important. We're going to go through your health, we're going to go through your finances, and then we're going to submit an application. When we submit an application, we're going to do it electronically on my iPad. They're going to run both your MIB report, and I'll explain. MIB is the Medical Information Bureau, where they're going to run all your medical history, and then your prescription drug history. And based on those things, they're going to determine what policy you qualify for. And again, I'm a broker and I work with 20 A+ rated carriers. Based on what you tell me, I'm going to be able to find the best policy for you, contingent on your health and on your finances. So this is very, very big. Analyzing their health diligently. I think sometimes we can submit a lot of applications and submit a lot of business, and then what happens is maybe we didn't do our homework and we weren't diligent on analyzing the health. People get declined, we try and put people into policies that they want and we'd like to have for them, but they don't have the health for it. So I'm a believer in the only application that's good for you to write is the one that they're going to get approved on. So you have to not play your hand. Understanding that not everybody is going to get the term HMS with living benefits and cash, like not everybody's going to get it. You're going to deal with, clients 60, 70, 80 on a mortgage protection, for instance, and there's going to be ways of, we're going to have to pivot. We're going to have to, look at equity closes and some of the things that I'm going to touch upon a little bit. But analyzing the health diligently before you start talking about all the bells and whistles that an HMS might do. Because the worst thing you can do is sit there and talk about an HMS and then they can only qualify for an AIG. Then you're dead man walking or dead woman walking. So analyzing the health diligently. Don't show what they can't qualify for. Kind of the same deal. Only play your hand when you know what they can qualify for. So I'm starting out right into the health. And I'm going to say, okay, Jane, have you ever had anything major? Stroke, cancer, heart attack? Do you take anything for diabetes? Do you take anything cholesterol, blood pressure? The last 7 to 10 years, have you taken anything that you used to take you don't take anymore? Any pain medications? You got to dig and dig for two reasons. Again, you're not going to show them what they can qualify for. And number two, you need to understand where you're going to go, where they're going to get approved and actually get a policy. So now I'm going through that health dynamic, and I'm understanding that. You have a primary care doctor, smoker, non-smoker. Then I'm going to ask the golden question, which is, what do you have outside of work that acts like life insurance? That's where you're going to find, opportunities for annuities, where you're going to talk about maybe pensions, maybe 401k, maybe other life insurances. All that stuff you're going to jot down. Here's typically where you're going to get some of the objections where people will say, I have a policy. I don't need this. And that's actually where some agents, I think, can fold, and it can be a little unnerving. However, that's actually where the fun starts, because 9 out of 10 people will not know what their policy does, or might just have one from work, or you can have them actually go get it out, and then you'll be able to show them where the issues and the gaps are in their policy and how what you're going to bring to the table is going to be better offer and it's going to make more financial sense long term. So the golden question is golden for a reason. The other thing I'll ask is, do they have identity theft protection? Where you can start pivoting and selling ReliaShield, which we should all be selling. Because the typical answer you're going to get is, I have identity theft protection through my bank. And then the answer to that is, well, your bank offers credit monitoring, but it doesn't offer true identity theft. True identity theft will insure you if you have someone steal your identity. What the bank has is where they're going to alert you and say, hey, Jane, someone stole your identity. But then when you go to put in a claim with them, you're not insured. So that's a great opportunity for you to sell ReliaShield, letting them know that they're insured up to $1 million. And we'll get back to that later on, kind of once we get through everything else. So, and also, again, finding out the safe money. Now, the big piece here is next, where I like to get into the budget. Now, I'm going to ask about how long their loan is. So let's say we have a 30-year loan. It's $200,000 for round numbers. And then I like to ask, what's the value of your house? Oh, the value of our house is $250,000. Okay, great. I also like to ask, if it's a refinance, let's say, when you refinance, how much money did you save monthly? And then usually, especially right now with the amount of refinances going on, they're going to let you know that they might have saved $100, $200, whatever it might be. That's another chip, because now I know they saved money from what they used to be paying. The budget is probably your best friend. So never go into this scenario and skip the budget and then just start showing prices. Because then they're always going to have on the other side where they can say, well, that's not in our budget. But if you have the budget, you know. And another good exercise is the fact that a lot of people don't know their budget. And a lot of times on newer mortgage protection, people just moved in their house and they're going to give you the objection that is, oh, we don't know what it is right now. And I've made the joke to people, well, that's perfect. I'm here, I'm a budget guy. I'm going to go through that budget with you and we're going to figure it out. And my services are free. And they laugh. So now let's say we're going to talk about the scenario of Jane and Bob who are in their 60s. So let's go through the budget and understand that their monthly mortgage payment is $1,500. Bob makes $4,500 on Social Security and Jane makes $2,500. So now they have $7,000 income. So then I like to ask, what else in addition to your loan are your outgoing monthly expenses? And I'll dive into it. Car, food, entertainment. And I like to say things like, I want to make sure that when we're going through this budget, even if the tires went or you needed a new washing machine, that you'd be able to afford your mortgage protection, because obviously it's one of the most important things. And we need to make sure in our budget that it's not kind of on the outskirts, that it's a fundamental dynamic into our budget. And in the current situation we're in, I'll also talk about the fact that is this what the budget is today with everything going on? Or is it different, if you guys were working? Obviously, that would be in a scenario of two, working clients as opposed to, Bob and Jane that are retired. So now we got $7,000, they're spending $1,500. One of the things that I like to look at is leveraging equity and survivorship of Social Security. So I will ask them, do they know how Social Security survivorship works? Because now let's say that income, that's their only income and it's Social Security, and they don't know how that works. That is a big chip in your corner, because now you're saying, okay, Bob, so when you pass away, Jane is losing $4,500 and she's keeping $15,000, and then vice versa. So right off the bat, you kind of know the need here, and correct me if I'm wrong, Bob, is we definitely need to put some coverage on you for sure, and then we're going to analyze, if we need to do so the other way around. That's a big chip with Social Security survivorship that a lot of people don't necessarily know. We're then going to talk about how we leverage equity. So now let's say in this scenario, they're in their 60s and maybe going the route of an HMS is very, very expensive. Or let's say in the health dynamic, we figure out that there's no way they're going to get it. They're just not healthy enough to get it. Now we got to talk about the leveraging equity. So if that house that they owed $200,000 on with the equity of $250,000, what I like to talk about is the fact that we're going to leverage your equity and find you an affordable plan that is going to fill the gap. And obviously, as time goes on, your equity will increase, your mortgage payment will decrease, and what you owe is going to decrease. So we're going to try and find something that's going to fill the gap. And no matter where we go here today, how large or how small, it's going to buy you time that you would not have without it. Because right now you have no coverage. And also I like to ask, are both parties on the loan? Because if they're not, I'll let them know that, if it's just the husband, you're the only one that really, you and the bank have the right to the house, and right now Jane doesn't. So we need to have something here that's going to, get her to the equity. This is where you get uncomfortable, and this is really where the rubber meets the road in an appointment. It's hard to get uncomfortable sometimes, but the more you do it, and the more you understand that getting uncomfortable makes them protected at the end of the day, and it makes your family financially comfortable. Once you learn those two dynamics, it's lights out, game over. So what I'll say, husband and wife, is, Jane, I'm going to ask you this question from a place of caring, but a very real place. If Bob doesn't come home tomorrow and there's a knock on your door that he dies in a car accident, what are you going to do? And then you wait. And then sometimes you'll even jump in before Bob, who probably will say something, and say, Bob, with all due respect, you're dead. So let's figure out, from Jane what she's going to do. That uncomfortability takes it from we're teetering to get the sale to we made the sale, because it makes it real. And ultimately what we need to do is make things real where clients understand what life will look like without the right coverage and protection. So then you wait and you let her talk and you let her tell you. And she's going to basically tell you that she needs coverage and she needs help. So now this is where you're going to kind of figure out the options that you need to choose. We now know the health. We know the financial dynamic. That now we're going to figure out where we're going. Are they healthy enough for an HMS? Are they unhealthy and we need to go with, one whole life or stack a whole life, or maybe looking at, is it an accidental policy? Is it a mixture? You can then kind of dictate the communication you give them on where you think would make sense based on what they're going to qualify for, number one. So I will flat out tell clients, I'm going to be honest with you, Bob and Jane, based on your health, you're not crazy healthy, and we're not going to get you this big term policy because of your health and your age. And frankly, it wouldn't make sense for you, because based on the budget we have here, it'd be way out of your budget and it would run out. So instead what we're going to do is we're going to put in a plan that's going to be permanent. So it's going to be there forever, which is key for two clients in their 60s. And it's going to leverage the equity that we spoke about. And it's ultimately going to get Jane to a good place, Bob, when you pass away. And it makes sense. And then I'll show 3 options. And I'll break out that mortgage payment divided by the amount of coverage that we're going with, and show them the critical time period coverage, if it's 2 years, 1.5, 1 year, whatever the dynamic is. Now, if they ever balk at price, the last ditch effort that I always have in my back pocket is the 3rd type of mortgage protection, which is the quote unquote traditional type, which is your accidental, which is obviously going to give you much more coverage at a less cost. So you basically obviously have 3 options to give. You have your traditional term HMS, some with the cashback, living benefits, which is awesome, and it's kind of a plug and play. And then you have these other dynamics of critical time period coverage or your traditional accidental old style mortgage protection. But any way you slice it, you can help that family as long as they're willing to kind of understand what you just communicated to them and go along with you. And that's how you will make more sales than not, because now you have completely analyzed their entire scenario and their entire situation, and you've gotten some from them where they believe in what you're saying and they understand what you're saying, and that you have their best interest at heart. And then with that 3 options, I'm also throwing out there the Relias Shield that we spoke about, and in all of this, with the golden question, if there was anything with safe money that I found, I'm going to go back to that at the end. And then one of the key things next would be start the application. Not ask them to start the application. I have my iPad out, I'm pulling up what I'm doing, and I start filling out your information and asking questions. Because again, we're here to get your policy, which is the goal of everything here. So this is kind of how I structure my mortgage protection in-home. I just try to keep it just that, very structured, and just basically the check marks I'm checking off on the financial inventory. And ultimately what I'm doing is figuring out where the gap is that they have, where the hole is, and I'm just plugging the hole. And this is why when you go back to phone when it comes to mortgage protection, and somebody asks you that question, oh, can you just give me a quote? You can't, because you don't know any of this. And when you know this is what will get you to the golden place of protecting the clients. So now we're going to look at final expense in home. Now, basically, the dynamic of everything I did on the mortgage protection is pretty much the same as far as taking control, kind of what I'm going through. So there's not a ton that's really different. There's a couple little different nuances, but I try to do the same thing because ultimately I need to know the budget. I need to know the other coverages. I need to ask the golden question. All those things I kind of already need to know. And I also think that when you kind of structure your final expense similar to the way I just did the mortgage protection, what ends up happening is you find bigger policies. Because if I just walk into your house on a final expense and it's very simple and cut and dry and I just get you a $5,000 policy for cremation, that's great, but I probably left premium on the table as well as annuity opportunities, as well as ReliaShield opportunities. So that financial inventory should be the same whether it's mortgage protection or final expense. So the next thing I do is back to getting uncomfortable. Now, the difference on getting uncomfortable on a final expense is I'm talking about the beneficiaries and I'm asking, they live locally. Oh, they live in Cleveland. All right, Mary, well, Johnny's going to have to fly in. He's going to have to take time off from work. He's going to have to do something with the grandkids. It's going to cost them money. So I know we're going to, look at getting you that cremation policy, but I'm also going to show you a couple other options that are going to, A, cover some of those expenses, as well as some of your just basic final needs in addition to the cremation. And as well, like most clients I meet with, they want to leave a legacy to their kids and grandkids. So I'm getting uncomfortable. I'm talking about a lot of things that they don't necessarily want to talk about, but it's getting them to ultimately where we need to go. So I'm talking about the beneficiaries, harping on the beneficiaries. I'll talk about 3 burial options. That max option for leaving a legacy, and then, depending on the budget, I'm going to gear it towards whether it's kind of the $10,000, just, your basic burial, or maybe your $5,000 to $7,000 of cremation. And that's really everything. What I'd say to everybody is take control on the phone and in the home, listen to as much training as humanly possible, and have confidence that when you go into a home that you are going to protect the family because you've been trained the right way to do so, and you care about them and you want to do the right thing for them. So that's all I have. I appreciate everybody joining me on the Next Level Live. God bless you all, and I hope to see you soon.